Welcome back, everyone, to Simple Mind Space. Today, we're diving deep into the captivating world of finance through the lens of an enigmatic figure known as BNF, the JCOM man. Buckle up as we journey through his unorthodox rise to trading mastery, his legendary triumphs, and the challenges he faced along the way. Our story begins in 2005. The world marveled at the audacity of Masayoshi Son, a billionaire investor on a relentless pursuit of growth. Yet, amidst this financial frenzy, a different kind of investor was carving his own path, BNF. Unlike Son, BNF wasn't driven by a thirst for more wealth. He was fueled by the pure, unadulterated thrill of the trade. Imagine, if you will, a dimly lit apartment, the air thick with anticipation. The faint glow of a computer screen illuminates the face of a young man, his eyes laser-focused on the flickering numbers reflecting back at him. This was BNF's world, a world of cup ramen, anime, and the relentless pursuit of the perfect trade. Even after a staggering $2 billion win, BNF remained unfazed, his hunger for the next adrenaline rush undiminished. The year was 2005, and a storm was brewing in the global markets. Whispers of a bear market sent shivers down the spines of seasoned investors. For BNF, this wasn't just another market downturn. It was a potential tsunami threatening to wipe out his hard-earned gains. He knew he had to cut through the noise, to rely on his instincts, and most importantly, to stick to his unconventional methods. BNF's journey began in the bustling streets of Osaka in 1986. Picture a young BNF, more comfortable within the confines of his room than navigating the complexities of the outside world. He was an introvert, content with his own company, until one fateful day, a spark ignited within him. A documentary series on NHK, Japan's national broadcaster. This series, featuring the legendary hedge fund manager Victor Niederhofer, was BNF's financial awakening. Niederhofer, a notorious speculator known for his audacious bets and equally spectacular downfalls, captivated BNF's imagination. Here was a man who lived on his own terms, a master of the markets. It was at that moment that BNF, inspired by Niederhofer's audacity, chose his trading moniker, BNF. Trading for BNF was more than just a means to an end. It was a path to freedom, a way to escape the mundane and embrace a life less ordinary. But unlike his idol, BNF wasn't born with a silver spoon. He was a college student, armed with an insatiable curiosity and a shoestring budget. Undeterred by his circumstances, BNF embarked on his self-taught trading journey. With limited resources available, he spent countless hours poring over whatever scraps of information he could find. Books on trading were scarce, and the concept of online trading was almost unheard of in 1990s Japan. Driven by an unwavering determination, BNF took on part-time jobs, sacrificing leisure and social life for his dream. Every spare moment was dedicated to studying the intricate dance of the markets. He meticulously analyzed charts, dissecting the movements of the Nikkei index, searching for patterns amidst the chaos. After 2 long years of relentless studying and disciplined saving, BNF finally had enough to dip his toes into the volatile waters of the stock market. $16,000, his hard-earned savings, a testament to his unwavering commitment, were now at the mercy of the markets. Unfortunately for BNF, his initiation into the world of trading coincided with the aftermath of the dot-com bubble burst. Japan, still reeling from its own asset bubble burst in the 1990s, was mired in what economists termed the lost decade. Asset prices had plummeted, wiping out fortunes and leaving a trail of financial devastation in their wake. Unsurprisingly, BNF's initial forays into trading were met with losses. The market, it seemed, was determined to test his resolve. However, these initial setbacks, far from deterring him, ignited a fire within him. He doubled down on his analysis, dissecting his losing trades, searching for the flaws in his approach. It was during this period of introspection that BNF stumbled upon his first breakthrough. He realized that amidst the pervasive fear of a bear market, investors often overreacted, creating opportunities for those brave enough to capitalize on the panic. This realization led BNF to adopt a contrarian trading strategy. He understood that fear, like a virus, could spread through the markets, causing investors to irrationally dump even fundamentally sound stocks. BNF saw this as his opportunity. He would buy when others were selling, patiently waiting for the fear to subside and the market to correct itself. His strategy was simple yet brilliant. He focused on identifying stocks that had deviated significantly from their 25-day moving average. In a bear market, BNF looked for stocks that had plummeted by at least 20%, believing that such steep drops were often an overreaction. But BNF's genius lay not just in identifying these opportunities, but in his meticulous approach to risk management. He understood that not all sectors reacted the same way. A 20% dip in a tech stock might be a blip on the radar, while the same drop in a utility stock could signal deeper problems. He painstakingly categorized stocks into different sectors, assigning specific deviation percentages to each. For instance, he observed that service sector stocks tended to rebound after a 22 to 30% drop, while emerging market stocks required a larger drop of 28 to 60% before bouncing back. Armed with this nuanced understanding of the market, BNF was able to consistently identify profitable trades. He had cracked the code of the bear market, and his profits began to soar. By the end of 2002, his initial $16,000 investment had ballooned to a cool $1 million. He had achieved the seemingly impossible, becoming a self-taught millionaire by the age of 26. However, just when BNF had mastered the art of profiting from fear, the market threw him a curveball. The bear market, which had been his proving ground, morphed into a raging bull. The global economy was on an upswing, and investors, flush with cash, were piling into the markets. For BNF, this presented a unique challenge. His contrarian strategies, so effective in a bear market, were rendered useless in a bull run. He needed a new approach, a way to profit from the optimism that had gripped the markets. Ever the student, BNF delved into analyzing the dynamics of a bull market. He realized that while the overall sentiment was bullish, individual stocks didn't always rise in tandem. There were always laggards, companies with solid fundamentals that were slow to react to the market's upward momentum. BNF saw this as his new opportunity. He shifted his focus from short-term trades to a more patient approach. He would identify these lagging companies, carefully analyze their financials, and then wait for the market to recognize their true value. Once the stock started to rise, catching up with its peers, BNF would sell, pocketing a tidy profit. This new strategy proved to be just as effective as his bear market approach. BNF's account continued to swell, reaching an impressive $10 million within 2 years. He had adapted to the changing market conditions, proving his mettle as a trader of exceptional skill and adaptability. Then came December 2005, a day etched in Japanese financial history, the day of the JCOM incident. It began like any other day on the Tokyo Stock Exchange. Traders huddled around their terminals, fueled by caffeine and ambition, ready to pounce on the next hot stock. Amidst the usual morning frenzy, a new stock listing caught everyone's attention: JCOM Holdings. Within minutes of its debut, chaos erupted. The stock price, instead of rising as everyone had anticipated, plummeted at an alarming rate, leaving traders bewildered and investors panicking. Meanwhile, at Mizuho Securities, a massive error had occurred. A trader tasked with selling a single share of JCOM at $610,000 had mistakenly sold 610,000 shares for a measly $1 each. By the time the error was discovered, it was too late to reverse the trade. News of the blunder spread like wildfire, pushing JCOM's stock price further down as fear gripped the market. Most traders, wary of getting caught in the crossfire, hesitated. BNF. He saw this not as a disaster, but as an unprecedented opportunity. Within minutes, BNF had pounced, snapping up 7,100 shares of JCOM at the limit down price. This gave him a staggering 49% stake in the company. It was a bold move, even for someone as audacious as BNF. He had effectively bet half his fortune on a single trade. As the market grappled with the implications of Mizuho's error, JCOM's stock price remained locked at the limit down, further fueling the panic. Realizing the gravity of their mistake, Mizuho frantically tried to buy back the shares, but they weren't the only ones vying for a piece of the pie. Institutional investors, sensing an arbitrage opportunity, jumped into the fray, further driving up the price. BNF, amidst this chaos, remained eerily calm. He knew he was sitting on a gold mine, but he also understood the importance of timing. He decided to sell a small portion of his shares, locking in a tidy profit, but held on to the majority, waiting for the dust to settle. It was a nerve-wracking decision, a testament to his steely resolve and calculated risk-taking abilities. The next morning, the Tokyo Stock Exchange halted trading in JCOM as regulators tried to make sense of the unprecedented situation. Institutional investors, fearing legal repercussions, returned their shares and profits to Mizuho. But BNF, the maverick trader, refused to play by their rules. He knew he had done nothing wrong. He had simply capitalized on an opportunity created by someone else's error. Mizuho, desperate for a resolution, had no choice but to negotiate with BNF. After days of tense negotiations, Mizuho agreed to buy back BNF's shares at a staggering $975,000 per share. BNF walked away from the deal with a profit of soar of $2 billion, making him an overnight legend in the Japanese trading community. The JCOM incident cemented BNF's status as a trading prodigy. He was dubbed the JCOM Man, his story becoming the stuff of trading folklore. Even the legendary investor Masayoshi Son sought an audience with him. Yet despite his newfound fame and fortune, BNF remained unchanged. He shunned the limelight, choosing to stay true to his reclusive lifestyle. He wasn't motivated by wealth or recognition. His passion lay in the intellectual pursuit of conquering the markets. As the saying goes, what goes up must come down. In 2008, the global financial system teetered on the brink of collapse. The U.S. housing bubble burst, triggering a domino effect that sent shockwaves through the global economy. For BNF, this was both a curse and an opportunity. The familiar terrain of the bear market was back, but this time it was different. The stakes were higher, the risks more significant. Emboldened by his past successes, BNF set his sights on the crumbling U.S. financial sector. He believed that, like their Japanese counterparts a decade earlier, American banks would eventually recover. His analysis pointed to Lehman Brothers, once a titan of Wall Street, now teetering on the verge of bankruptcy. BNF, convinced that Lehman Brothers was undervalued, took a gamble, investing $6.5 million in the beleaguered bank. He believed that the market had overreacted, that a rebound was inevitable. However, this time, BNF's instincts failed him. He had made a critical error. He had underestimated the depth of the crisis and the extent of the rot within the U.S. financial system. Lehman Brothers, instead of recovering, filed for bankruptcy, wiping out BNF's entire investment. The Lehman Brothers loss was a significant blow, both financially and psychologically. It was a stark reminder that even the most skilled traders were not infallible, especially when venturing into unfamiliar territory. Undeterred by this setback, BNF returned to his comfort zone, the Japanese markets. The global financial crisis had impacted Japan as well, sending its economy into a tailspin. The Nikkei 225, Japan's benchmark stock index, was in freefall. BNF saw this as an opportunity to recoup his losses. He dusted off his old playbook, meticulously analyzing the Nikkei's movements, searching for the telltale signs of a rebound. On October 10, 2008, he made his move. He invested heavily in several blue-chip Japanese companies, convinced that the market had bottomed out. However, the market continued to move against him. The Nikkei, instead of rebounding, continued its downward spiral. BNF watched in disbelief as his positions turned red, his losses mounting with each passing day. Most traders, faced with such a scenario, would have panicked, desperately trying to salvage whatever they could. BNF, he had faced adversity before, and he knew that panic was never a winning strategy. He stuck to his plan, confident that his analysis would eventually prove correct. On October 27th, with the Nikkei trading below the psychologically significant 7,000-point mark, BNF made a bold move. He doubled down on his bets, increasing his exposure to a staggering 64.8 million yen. He had spread his bets across 90 different companies, effectively betting on the recovery of the entire Japanese economy. It was a gutsy move, one that would make even the most seasoned trader balk. But BNF was not swayed by fear or doubt. He had faith in his analysis, in his understanding of the markets, and most importantly, in himself. As the trading day drew to a close, there were signs that BNF's gamble might pay off. Several blue-chip companies, buoyed by positive news, started to rally, pulling the Nikkei up with them. BNF, sensing a shift in momentum, decided to hold his positions overnight. The next morning, he woke up to a sea of green. The Nikkei had surged, erasing the previous day's losses, and then some. BNF had timed the market to perfection. He calmly began to unwind his positions, selling his shares into the rally and locking in a profit of over $12 million. He had not only recovered his losses, but had done so with a vengeance. The 2008 financial crisis was a trial by fire, a test of skill, temperament, and resilience. BNF had emerged from the crucible, battle-scarred but victorious. He had proven that his success was not a fluke, but a testament to his unique trading philosophy, a combination of rigorous analysis, unwavering discipline, and an uncanny ability to remain calm amidst chaos. As of today, BNF continues to trade, shunning the limelight and letting his returns speak for themselves. He has diversified his portfolio, investing in commercial real estate and other asset classes, but his true passion remains the stock market. He is a silent giant, a legend whispered about in hushed tones in trading rooms across Japan. BNF's story is an inspiration to anyone who dares to dream big, to challenge conventional wisdom, and to carve their own path to success. He is a testament to the power of perseverance, self-belief, and the relentless pursuit of knowledge. So the next time you find yourself facing seemingly insurmountable odds, remember the story of BNF, the JCOM man. Remember that success is not a destination, but a journey, and even amidst the chaos, opportunities abound for those brave enough to seize them. If you enjoyed this deep dive into the world of high-stakes trading, be sure to hit that like button and subscribe to our channel for more captivating stories from the world of finance. Until next time, happy investing.